Hi, I'm Sara Holland, and I'm a New Hampshire licensed real estate agent, and this is Man vs. Land, a segment intended to educate the public on various home and landowner topics as discussed with guests who are experts in those fields. Today's guest is Marcy Dembiec, who's a mortgage originator with the Meredith Village Savings Bank. Before we begin, I just want to advise that this show does not constitute legal advice and is for educational purposes only. We are always available to field questions, so feel free to reach out to us on Facebook at Man vs. Land NH. Thanks, Marcy, for being here.
You're welcome. Thanks for inviting me.
So today we're going to talk a little bit about financing and what the process looks like and how we get people into those new homes. So why don't we start off by having you let us, share with us a little bit about what your background is and what you do.
I have worked at Meredith Village Savings Bank for the last 11 years, little more than 11. I started in the loan processing department, and I had a little bit of loan processing background along with a little real estate background. I grew up with a household of realtors. And so after I had been at the bank for a little while, the mortgage originator position opened up, and I've been doing that for the last 11 years.
Excellent. Excellent. So you get to know all of our community members very well because you put them where they are. So that's kind of nice.
Yes, definitely.
So let's talk a little bit about how your lender, as a buyer, how your lender is a vital part of your home buying team.
So as some of you know, buying a home is a very big investment, and so the first thing that I recommend is picking somebody that you know or trust, or getting a referral from somebody that you know or trust, a family member who has used a lender before, or your local bank. You might know a lender there. You're going to be with that person for at least a couple months throughout the process, so you really need to know and trust them in order to feel comfortable with purchasing the home.
Yeah, and as with realtors, we spend a lot of time together. It's a nice little happy family by the time we get you to move right in. So talk about the, when you first sit down with a customer, what does that look like? What information do you need from them?
When we first sit down with a customer, hopefully they've come to us before they started looking at homes.
Sure.
And I say that just so that we could possibly talk about what price range they should be looking in, what they qualify for, what they think they might qualify for, and especially what they're comfortable with for a payment.
Great.
There's a lot that goes into a mortgage payment besides just principal and interest of the mortgage. You have homeowners insurance, property taxes, and also mortgage insurance if you don't have 20% down. Right. So I try to go over that with all of my borrowers to make sure they're comfortable moving forward and going to look for a house in a certain price range. We also go over some of the programs and products that might be available, whether it be a first-time home buyer product, which could be up to 100% financing, or a product more conventional, putting 20% down or even sometimes 50% down. Also, it's nice for the customer to come visit a lender prior to seeing you as a realtor, because of the fact then they know that they're in the right ballpark as far as price and what they're looking at. So they may be more creditable to you or the sellers, knowing that they were already pre-qualified.
Absolutely, and you had mentioned the different types of financing programs that there are out there, and not only, and we'll talk a little bit about this later, does the buyer need to qualify, but the property needs to qualify for those programs as well, and that's a good thing to know ahead of time.
Yeah, we touch on that a little bit in the appraisal process about what might happen if the property doesn't necessarily qualify.
Sure. So what type of information do you need from the client in order to pre-qualify them?
When someone comes in, there's a couple different ways to be pre-qualified. You can meet with a lender, or we have an online application system where it could be as easy as filling out your personal information, and the system may generate a letter for you right there. Okay. Which sometimes is very nice if you want to start looking right away. The information that we're going to need, besides the normal name, address, all of that, to go along with their application is their personal information, such as W-2s and pay stubs. Okay. If you're self-employed, we'll need a couple years of tax returns, bank account information, checking, savings, retirement. If you already own a home, we'll need some information on that home as well. The current mortgage statement, the taxes, the homeowner's insurance.
Okay.
And the other thing that we need, the most important thing, is if you already have a home and a purchase and sale agreement that you're, a home that you're looking to buy and a purchase and sale agreement, we're going to need that.
Okay.
So we can know those wonderful dates of financing contingencies and closing.
So you're basically looking under the hood of the buyer to make sure that everything is in order, and you work within regulations as well, to make sure that you're not, lending more than they're able to repay. So let's talk a little bit about items that you are required to disclose and kind of the regulations that you're working under to protect the consumer.
So when a customer comes in and they've filled out an application and they have a property that they have a purchase and sale agreement on, as soon as we get that information, we're required to disclose a loan estimate to the borrower within 3 business days. That loan estimate consists of how much it's going to cost the buyer to get a loan. All the closing costs that the bank charges, the appraisal fee, title insurance, the state of New Hampshire transfer tax. So they have a good understanding of how much it's going to cost before closing. And what's great about the loan estimate now that it changed a little is the fact that they know approximately how much they're going to have to bring to closing.
And that's good for them to know as well. Now, I don't know if they're able to shop for some of those services. I know the transfer tax is something that is what it is. Are there insurances or title costs that they can shop for, or is the fee that you quote on there just the fee that they have to pay?
We actually quote the fee, the maximum fee.
Right.
And then if it's a little bit different, depending upon if something changes throughout the process. Title insurance varies a little tiny bit, but we always quote the most expensive on our loan estimate.
So they're never going to be caught with needing more than what you've originally estimated for them. Great. Let's see. What about a few warnings or things that you need to avoid throughout the process? I know I talk to my clients a lot about what not to do. Once you have a house under contract and you're working towards the end goal of getting the keys, you don't want to mess that up. What are types of things that you talk with your clients about?
It's nice when they have that forewarning before from their realtor. Some of the items that I talk about as well are any of those purchase items that they can avoid doing throughout the process. Their credit has been pulled. It doesn't mean that it won't be pulled again. So I even talk about don't go buy the furniture, don't go get a new car loan, don't get a new student loan. Some of the things that you might not even think about. I try to warn them not to, have any additional debt. The other thing that I try to warn some of my customers about is don't change jobs if you can't, or even the cutting your hours or increasing your hours might discount you from a certain loan that you're already approved for.
Oh, that's good information to know.
It is, because you wouldn't necessarily think about that, but some of the first-time home buyer products, you may make a little bit too much money if you put in that extra overtime, and then you might not be able to qualify for that product anymore.
So that's very important to have an open, relationship and good lines of communication with your lender as well as your realtor. We are kind of the team,
right?
So we're all working on your behalf, which is a great thing for
Definitely.
Everyone to know.
The one other thing that I usually try to warn people of is any large deposits or unusual deposits in their checking or savings account. Anything that's abnormal, not just a normal paycheck or something like that, because under regulations we have to get more information for those large deposits. If we know you're getting a gift, that's great. We just have to document it. That's all.
All right, a little bit more paperwork. So again, talk to your talk to your lender. The appraisal process we touched on a little bit earlier, and why it's necessary and what it means for the buyer, and it's all good things, I think, but it can be a trying time. That's the longest time period.
Part.
Yeah.
Yeah. That, as you know, it's taking a while for appraisals, especially in this market that has picked up.
Absolutely.
It's the longest part of the process, but the most important part of the process, because of the fact that we're making sure that it is adequate. The home that you're purchasing is adequately valued for the purchase price that you're paying. And the other aspect of that is that we want to make sure that it meets the guidelines that of the loan that you were approved for. Good example of something like that would be if you're buying a primary residence and the home that you're purchasing doesn't have a central heating system. That might throw it out of that being able to qualify.
And super important here in New Hampshire.
That is true. Definitely. Or maybe a modular home that turns out to be a mobile home and someone might not have known. Those are good examples of what might happen.
And not just the government lending programs that are available that have those guidelines, just the general lending guidelines are to make sure that the house is complete.
Correct.
Yeah, so that's very important. I mean, with this market, there are a lot of homes that are considered fixer-uppers, and folks are able to purchase them at a very reasonable price, knowing that they're going to go in and do some renovations to them to make them habitable, because that's their industry. But a lender may not allow that for that particular home. It doesn't qualify.
Correct.
So that's always great to know. Talk to your lender and your realtor, and we make sure that you don't fall in love with a home you can't have.
Correct.
That's the biggest thing, and that's happened time and time again, and it's really too bad. But it's all to benefit the client and make sure that they don't get in over their head. We've all seen those movies.
Or the whole mortgage process, as you know, regulations have changed, and it's to protect the consumer, the person that's buying this home. They want to make sure that everybody knows what they're getting into, because having a mortgage is not you might be stuck with it for 30 years.
Yeah, and sometimes you don't notice how serious of a transaction it is until you get to that closing table and you have a stack of documents this big that you need to sign. So yeah, it's as trying as it may be, it's all for their benefit. So yeah. Now, why it's not over until it's over? What are some stories that you can share about that?
Well, once we have everything, meaning the lender has everything that we need in your file, which might be pretty thick, your loan will be cleared to close, and the closing agent will contact all parties involved so that the realtor, the seller, the buyer, so that they can schedule a closing. At that point, you're like, yay, things are over, but it's not necessarily the case. You still have to make sure that your homeowner's insurance is all arranged. We, as a lender, have to make sure that we get your closing disclosure out to you 3 days prior to closing, which your closing disclosure is very similar to your loan estimate that we talked about a little while ago. So it will tell you the bottom line of how much you're going to have to bring to closing. It should be very similar to your loan estimate unless there was an additional deposit made or something like that. But that's to protect the buyers so that they know exactly how much they have to bring to closing, and they can look over the documents 3 days before closing. Also, you have to arrange for getting the money, a certified check or a wire.
Absolutely.
That's a step that a lot of people forget. And then, of course, the walkthrough inspection, whether it happens the day before or the day of, there could be something that comes up there, as you know, probably all too well.
Yes.
And in reality, it's not really over once you sign on the dotted line, because now you're a homeowner, which is wonderful. Congratulations, you own a new home. However, now you have a 30-year mortgage. And
there are all the responsibilities that come with that.
with owning a home and
Yeah,
keeping a home
absolutely.
up.
Yes, and if you have not done it before, then it's, sometimes a shock, but sometimes you know that you know what you're getting into, which is great. So the process kind of start to finish, and I'm going to throw in some things on my end as well, so our folks kind of get an idea of what that is. So you're going to want to meet with your lender first to do that pre-approval, and then find a realtor that you want to work with. And you find a realtor in the same way that you would find your lender. Maybe a family member has worked with one, or another referral, or you can certainly walk in off the street and interview folks, but that person is going to become a part of your life, just like your mortgage lender. So you start with your team, you find the house that you want to make an offer on, you get that purchase and sales agreement in your hand, and you're really excited. And then it's a flurry of activity at the beginning, the first 2 weeks of the contract, because you're getting documents to your lender, and you're having home inspections, and you're kind of going through those first little fail safes to make sure that the home is what you intend it to be. And then there's a long waiting period while we wait to get the appraisal back. And then the flurry of activity happens again at the end. So it's a very tumultuous time. And it's good to have people that and like and trust, on your side. And I know with my clients, and I'm sure you can attest to that you kind of become part of their family through the process.
Definitely.
Which is very nice. And lifelong friends.
Yes.
Yeah. Because you place them in your community, and you see them at football games and at restaurants. So yeah,
definitely.
So it's very nice.
A lot happens in 45 to 60 days.
Oh my gosh. Yes, it does. Yes, it does. Well, Marcy, thank you again for joining us. Is there anything else that maybe we missed that you wanted to highlight?
I think we covered it all.
Okay, great. And can you tell folks how to reach you if they have any questions?
The best way to reach me is to either give my cell phone a call, which is 393-6074, or stop in any of our branches, and I'm the only Marcy that works at Meredith Village.
Great. Well, thank you so much, and hope you come back and join us again. We'll have more to talk about.
Thank you.
All right, thanks.